Okay, Brent, let's talk about this. We had a couple of good trades we wanted to discuss, and it's been busy, so we haven't got around to it. But I want to get these down because this stuff shows up again and again, so people can understand the thinking process. But the first is on May 10th, and we considered that. You and I always talk about what do you think might happen tomorrow, and on May 10th, going into the day, people can look at their charts here. We had some big trend days down, and one of the strategies we like to use is the morning after trend day, which means people get emotional after a trend day, and the market often likes to try to either go up or down the next day, which could be counter trend or pro trend. And oftentimes it keeps settling towards the middle. It wants to just have a mean reversion day after a huge trend day. But lately we've had multiple trend days in a row, which is very rare, but it's been so weak. So then you get like a double high probability morning after a trend day when that happens. And that's kind of what coming into May 10th is what we thought. So I'll let you add to that however you want.
Right. The big thing there was the market had been making new lows for the previous, 3 sessions, and it was just multiple sell days, and the market was so oversold. This was right after the Fed. You remember Thursday of last week, sold off a ton after the Fed, and then continued on Friday, and then even on Monday. So it felt right that not necessarily looking for a bottom, but looking for a point at which it was safe to buy, right?
Mm-hmm.
And if you look at the morning, we sold off. We opened up high, and then we sold off pretty hard. I think probably like 2% in the equity markets, and just making new lows. And you and I are thinking, well, this seems like it might be right for people to get a little bit stuck, and for some people to start seeking some value and start coming in with some buy orders. The problem is you're in the middle of a downtrend, and so that's not always easy to identify when is a good time. So then you and I started thinking about, well, how could this set up? So I'll let you take it a little bit from there.
Yeah. So the important thing is in a lot of the ways, a lot of our best trades are thinking about psychology of other participants and where they are stuck and what they may be doing. So after the 2 trend days hey buddy, this is my son coming in here. I'm doing a podcast. Hi. It's okay. It's okay. We're going to roll right through that. And then, okay. So back to the psychology of it. We have two down days in a row, right? So coming into May 10th, I just need to kind of repeat this from my own brain. If we run up, I'm suspect of that. I'm suspect of a huge rally after 2 big days down, kind of in the middle of this bear market. Usually doesn't quite work that way. I don't trust that. So, okay, that's one thing that happened in the morning. And then in the afternoon, it starts heading back down and tries to take out the low. So that again is suspect to me because I understand the extremes, but I don't necessarily think they're going to continue on a day when we had 2 big down days in a row. It just doesn't work that way behaviorally. It doesn't make sense. So what you get is these tactical setups where after it takes out a high or takes out a low, it sometimes has an explosive move back to the middle. So that's kind of where we were sitting central time around, I don't know, like 11 to noon central, Monday, May 10th. Okay. And then 39.60 in the S&P futures contract was the other low from the day before. Was it overnight? It was another relative low. So we were feeling a lot of stocks that wanted to go up, and we were seeing us consolidate back down there on May 10th. And we were thinking it's unlikely we're going to plunge 3 days in a row. So how do we set this up? And then I'll let you speak a little bit on that now.
Yeah. So I obviously wanted to be long, so I have the bias. Like I want to be buying this, but where is it safe to buy? Well, that's hard to say, but you can kind of figure out when we talk about psychology of like what will bring a lot of buyers in. And that doesn't mean just people seeking value, but people who might have made a mistake and sold or shorted and then decided, oh, I need to get out of these. I shouldn't be short. Or people who exited a position based on a stop or whatever, and now they want back in because they're like, oh, I was wrong. So you have these two groups of people, or possibly even 3, that are now seeking to buy as opposed to sell. So you got the people who sold it and that feel like they made a bad decision, and then people like us who are looking to buy start coming in as well to buy it. So it gives a lot of strength to the move. So what we looked for was like, well, there might be stops underneath those 60, 63 areas. So I said, I can't really buy it until I see those get taken out or see it dip below there, and then I'll wait and see if it comes back in, because otherwise it does happen where it's not always MATD. Maybe it just it has another trend day down. I mean, we had seen that in the previous week, and you know, so you have to be aware of that's still a possibility. So
You're
that
aware of that on protecting your risk, but you know that 3 days trend in a row is the probability of that is so low deep into the
totally.
move. So I think the key point here is once we identified the psychology of what may happen today, we didn't know how to play it plays out. You never know for sure. But then all of a sudden, around 11 to 12 Central Time, we start seeing it looks like it feels like it wants to go up. And you can see it hadn't taken out the 3960s yet, but it feels like it wants to go up. And then when it rushed down there and took out those 3960s, blew out all those stops, it comes ripping back and it puts in not one, but two failed lows and puts this little mini inverse head and shoulders type pattern. And then at that point, we felt really strongly about getting involved in the 3970 area. And then boom, you see, we had a massive rally there, 60 handles. And I don't remember
Right.
where we got out of that. But my point is that we set that up with going into the day, thinking that these kinds of moves are probably coming today versus the trend. And then we would have never known the day before that 3960 would be the area this happened. But once it started shaping up, we're like, okay, it wants to go up, but we need to wipe these stops out first. I think that's what needs to happen. And this is a familiar theme. The next podcast, we're going to talk about how that happened again. But that's kind of how I set it up. And I think you're similar.
Yeah, and I felt safe. I felt
Yeah.
safer, I should say. And so when we're doing that trade, it's getting in when it comes back into the range, and then my stop is kind of it's another new low. If we get a new low, then I'm like, this trade didn't work, and I'll have to wait. But then I didn't even really put on a big position until we started moving up towards the high of the range. And once it took out the bottom, I now felt confident that it was going to aggressively take out the top. But it wasn't until we got through that top that I started actually really committing to the buy. I'm not trying to pick the bottom. I'm just trying to pick the area where there's a lot of strength.
Exactly. I like this. I feel like that. So I think for people, the takeaway is one of your ways to prepare for the day could be after you see a huge trend day. You're open to the possibility, the probability, I would say, that the next day is going to be more of a mean reversion day, and you should be more suspect of a second big trend day, up or down. Now, sometimes in an extreme market, you get two in a row. You almost never get three. I mean, you might get three every few years. Honestly, I don't know what there's stats on it. I don't know what they are, but they're very, very low. Two in a row is even low. So you just kind of. I wouldn't say this is my strongest setup, but it's definitely a setup that I've done well with. Usually, there's a couple good trades during the day where people betting on another trend are going to get stuck.
Right. It's just a tool in the toolbox.
Exactly. Great. I think that covers this one, unless you got anything to add.
You know what? I might say the target on the trade.
Yeah.
It's not just go up forever, because again, we're talking about it's MATD, and so it shouldn't probably break out of the range. So I think our targets were up there, kind of towards the high of the day. Never quite got there, but that was what the target should have been.
Well, a lot of times my target too, if I get a little oversized, it's just the VWAP or the middle of the day's range. It's arbitrary, but I like to take some off there just to say, hey, I'm going to book some of this, and then just kind of wait and see. But the other thing is the risk. Where's the risk? How do I know I'm wrong? A lot of times the way these trades work for me is there's multiple tries where I'm losing, and then it feels strong, but it just keeps stopping me out. And then all of a sudden it puts in a failure, blows out the stops. And then I trade it a little bit bigger. And then I put my stop back under those 60s. And I say, we should not be trading back. We should not be trading back below these 60s again, given what I just witnessed. And if we do, then I'm wrong. And I got to size appropriately to handle that. And then when it starts to go, a lot of times I'll add more. On the 74 or 75, I'll be buying more. This is how I trade. Doesn't mean everyone does. And then on those, I'll have a tighter leash. I might say these shouldn't go back below the 70s. And I'm kind of massaging it that way. So I like to add to my winners once I feel like everyone got stopped out. So it's an art form in terms of how to handle it. This is not, everyone wants like something very linear where it's like I get in, I put my stop, and I go back to work. It's just it's
right.
too fluid. This is too fluid. So this is kind of
and there's no correct answer. Like I mean, different things work for different people, and you have to do what suits your personality best.
Exactly. And on the and those of you who are position trading and trading a little longer term, the same logic makes sense. And there'll be other trades that we do that we'll talk about that stuff. But right now, this is the game because it's so busy. So there's more day trading going on over here. But it will other trades where time frames are longer will show up as well. But um, I've kind of learned that stay short term and during the day and with the index when it's busy, and then when it slows down, go back to kind of the other stuff. So,
Yep.
all right, great. Take care.
All right, Brad. See ya.
Goodbye.